some of you have been to the meeting a short time ago of Fortune have already seen this, but very quickly, this is the S&P 500. It has been in a downtrend since the beginning of January. In fact, it was showing signs before that, which was the Omicron virus. But with the uncertainty over the Ukraine, the market didn't like it, and it fell 14%. It's now down about 6% from that top point there, and most of the indicators say it's continuing to go up. So we've experienced our first proper pullback, and these come about every 2 years on average. So it's not something that's unexpected, and it certainly hasn't done us any damage. That's the overall market. I'm not sure if Owen might join us. He's going to talk some more about the overall market. Next, we'll have a look at the trading screen. And I've just spotted a trade that we might want to close while we're in here. But first of all, Sapphire is just it's just getting a lot of money in. I was told today that we've got in the UK bank a further £187,000 to go to the market. So that's going to be a huge amount of money. It's not a problem. We can more than handle it. And it's quite a lot of work in terms of the value of the shares that we already have will now be lower than than is ideal for the account value. So we'll want some topping up, which is fine. It gives us a chance to do some dollar cost averaging, and we'll find some new trades for it. But I would just so it won't dilute the performance of the money that's already in there, but new money coming in, especially that amount of money, this is going to be the first opportunity we get to trade it. And the most likely thing is that we will sell puts. Probably not all 180 odd thousand will go into 3 months away puts. Some will be 3, some 4, some 5. So it will take the account a little while to digest some of that additional money. However, it will enhance performance, and I fully expect this club to get into the lead. At the moment, it's Diamond, but Diamond's been running for 28 months, I think it is. But nonetheless, it's not going badly. We've already got quite a lot of stock buying power. So the stock buying power needs to be above half of the value of the net liquid value of the account. So if you call that $320,000, we shouldn't go below about 320, and we're at 144. And that's after I've been using some today. So we've got a lot of trading to do, and some of these numbers are going to increase quite dramatically. Gone will be the days of holding 2 or 3 contracts of things. We'll be way up there. But earlier on, I spotted this little fella down the bottom here. Southwest Steel, we've got an option, a put that was sold, $27 strike price put for April, which is currently at 97.52% profit. That means that we're looking at, we got $5.45 for it, and it looks like we could buy it back for the moment for about 14 cents or something. There's well over $6,000 in that, and there's no real point in holding on to it for the extra 2.5% or less. For the sake of 14 cents, we might as well take it back. And there are 12 contracts in it. Everyone happy with that?
Yep.
Let's have a look, see what's happening. So this is a buy to close contract. They always take a bit of time to fill. There we go, $27. And we'll put the 14 cents in for the moment. It's only 13 to 14. And if we verify it, we might get a different price. So it hasn't given us a market price as such. It's going to cost us $168 to get 6,000 odd back. Shall I negotiate? I'll negotiate. I'll try 12. We don't want to break the habit of a lifetime and not negotiate. It might even say you got to go in 10-cent intervals, in which case we'll try 10. It's been submitted, so it's got past the starting gate. So we now go to orders. There we are. So that will have actually increased the cash up there, because the premium will have been counted as a negative until we close the trade, and then it goes into cash. Right. Next, I want to share with you the spreadsheet. See where we're at on that. Just to explain again, in case anyone's missed it, most wanted is a reflection of the increase that has been forecast by value line between the current price, and that does move up and down in real time, and the highest of their 3 to 5 year forecasts. So the one that's got the biggest percentage increase in that forecast will be at number 1, and so forth. And we've got a fair old mix of these at the moment. If I go down to the bottom, so it's not a weighted average, it's just an average of those numbers above. But it's a good indicator. So 51. And if we only held, say, the top 30, then the average would be something like 15.5. So we're never going to get to that ideal, but we can certainly bring it down, I think, from the 51. So as we go along, it won't be a sort of live or die by rule, but where we get the chance, we will go for lower most wanted rankings rather than higher ones. So that's there. Then you can see the various trades we've got. And the next thing where your eye probably should go to is across to column S, where we can see how they're doing. I should say anything that's sort of significantly a profit here has already been closed and taken. So you'll always get a smattering or more of reds in here. So let's have a look at a couple of these. If we take the very top one, April put for AIS, we are in danger of paying $100 for it. The current price is only called at 87, but as we had $15.40, we're okay with it. We're in the black with it. AEO, we've got stock, and haven't yet sold a put on that. Sorry, a call on that. There wasn't one available when I looked earlier today that was worth having. We have got 600 shares at $31, and to dilute that down, we've put in another 1,000 at $23. The current price is 17.5. This is a stock that is forecast by Owen, Value Line, and everybody else to be increasing. So it's not a big problem to us to be in it and have plenty of it. By doing what we've done, we have reduced our exposure from 25.50 to 21.85, and instead of being in the black by $8, we're now in the red by $4.33. So that's an example of using a put to see if we can get some dollar cost averaging. I'm just wondering whether it's worth going back and having a look to see if there's a call. Let's go back and have a look and see if there's a call on that. As I say, there wasn't earlier. So if we go to the option chart, AEO, American Eagle Outfitters, and we would if we could be interested in April, that's what we would be. Present price is 17, call it 17.50. So we want to be somewhere above that we consider to be safe in the short term, and there isn't a premium really worth having in that sort of area at the moment. Don't want to risk losing the shares too cheaply. But we could certainly have a little look further out at May. Sorry, I'm going to admit somebody. I'm going to stop sharing this and share the charts with you. Let's have a look at the charts and see where we think this might be come the third Friday in May. Here we are. So it's still on its sort of downward path. That sort of trajectory going back up. Be slower than that. That distance to there. If we could sell a 21, certainly a 22, I think I'd be okay with that. Anyone not happy with that? Good. So if I go back to the option chart, and if we look at the 22, there's only 20 cents. How many have we got? We've only got we got 600 of them. While 20 is probably not worth bothering with, we might get a decent spread. No, we don't. Let's verify it and see if there's anything there. So it's not telling us the live prices. So I will leave that and keep watching it. There's plenty of time between now and the third Friday in May to get some option income on it, and that's the sort of process I'm going through. I go back
given the amount of money in the account just now, Jeff, is there any merit in doing some further dollar cost averaging and clawing back a couple of dollars that way?
Let's just check that out. Hold on a sec. So, and with the money coming in, especially, a lot of money to trade. So if we're looking at probably $800,000. So we could happily have $40,000 worth of this, and that would represent about 5% of our account. So there is scope for more, yes, and it is one that's headed in the right direction. But that's probably the case now for all of these with all the extra money in, and we definitely haven't got time tonight to go through every one. But let's have a look at this one. So we've already got a May put. Don't know when we did that. We might be getting a bit close to May. Stop sharing this. Start sharing the option chart again. May we could sell if we think 22 was sort of safe-ish for May. We could sell the 22. Yeah, it's only at 17.50 at the moment, and there's $4.80 on it. 21, a little bit of blue on that one. 3.90. Or we can go further out. $5.
I suppose it depends whether you want to do it with a view to getting the shares or just to get the premium to balance out where we are.
Yeah, it is forecast to increase. It is one that is on the target to own anyway. I'm just having a look. Just a bit of paper here. I didn't get from Owen how far he thinks it's going to go up, but I can tell by the charts. I know I can draw my line where I think he would draw his. Let's have a look. There's a gap there as well. It's certainly expected to get to 30 because there's a gap that would get closed when it got to 30, and it's got plenty of headroom at that. It's speed up at It's been up as high as 39.40, so there's plenty of scope for it. And well, given how much money we've got, I'm happy to do that. No problem. Anyone want to talk in favor of a particular strike price? Could go with that one. Could go with that, the top of that gap. Could go with 30. I mean, I don't want to get reckless just because we've got a lot of money.
Yeah, I mean, I'm maybe a bit more cautious. I was thinking sort of 21, 22 to bring our average down slightly and also bridge the gap between where we are just now, but happy to take input.
Yeah, I mean, it's not a danger up at 30. If you look at the bids, like 12, 30, 13. So I mean, you get paid for it anyway. But I do like the premium to be on top of the profit from selling the share. So I'm happy to go with 22.
Are we looking at June now, Jeff?
Yeah. And so how do we work out, kids, how many we want? Okay. So we're saying we want to end up with about $40,000 worth. And if we've already got 28,000, so we've got about $12,000 we're looking for. So it's $12,000 divided by 22 equals 5.5. So 6 contracts is okay on this.
Would you go for all of that in one go, or would you sort of keep some of your powder dry for a trade later on if this is a June put?
No, I mean, we're using it to dollar cost average, so I want more rather than fewer to dilute the higher stuff above it. This is not one to be sort of, well, let's just do half a trade on it. Effectively, we've already done the half a trade because we've got $28,000 worth, and we now want a dollar cost average it. Yeah?
Fair enough.
Okie dokie. So we've got 485 by 505 until we see what we're actually looking at. I'll put in 495 until we verify it and see what's going on with live prices. And it's still not. I remember now. There's a problem with this. Owen found out that when the account was opened, some box wasn't ticked. So we don't actually see the live prices on it. I'm just going to open another account.
Jeff, I've got it if you want some.
I'm there. So we're talking about, it was June, and it was the 22. Verify. Yeah, 475 by 505 is the live price. So 475, 25, 30 cents. We're looking at probably 485, about a third of the way up. Okay, now we'll let that sit on the system. We'll just leave it as a limit order. So I'm going to stop sharing this and go back to the charts. So just looking at a couple of these going down, see what else we've been up to with them. ATIS there. I know one's on top of the other to the way around. We've done a similar thing there. Sold a lower put. BABA is an interesting one. Current price of it's Alibaba. Alibaba, what I've done there is sell a call that is below the current strike price. So it wasn't at the time, of course, but it is now. So that one we'll have to, I think, push forward or buy it again if it goes from us. Don't like the idea of that being there. What else have we got? BlackBerry didn't get put to us. The price, we'd sold a put at $7 and it closed at about $7.02 or something. So we kept the premium, but we didn't get any shares. Most of these are not horrendous. Most of them are sort of, $1, a couple of dollars or whatever. Here's one that isn't EBS, so that wants sorting out. There's a huge difference between the strike and the current price. We've only got 200 shares, and it is one that's forecast to increase again. So we can certainly add significantly to that and bring it right down. We've also sold a May put to help it along its way. So if you like, taking the chance that with the current price of 42, 43, that it's not likely to get to 55 by the third Friday in May. So we might as well take 50 cents off it in put premium. But we're going to have to dilute that, I think. There's another one that wants looking at, which is Foot Locker, which you've already started with to dilute it, but we can do it again. It's hardly surprising when the market went down 14% that we've got a few of these to deal with. Another one there, GPS, which we started on, brought it from $10 down to a collective $1.45. So it does work. Yeah, so lots to go at, lots to do, but really, they take quite a long time. I will probably spend tomorrow afternoon going through these with a fine-tooth comb and actually working out on each of them how many we need, looking at the charts on them and looking at the returns and seeing what we want to do with them. But the main thing is now look out for this £187,000 worth of dollars coming in and to find a good home for it. Let me just share something else with you. I've got the last dashboard that came out here. Here it is. So at the end of, this is from the end of February. So we actually only had 5 months, and I don't think the first month probably would count anyway. We were sort of getting sorted out and getting stood up. But even on the total amount of money that's been invested over 5 months, we've made on the in trading terms 45%. And if you look at the average amount of money we've had available to trade over those 5 months, that was just over half of that, 382,881, and on that figure we've done 141. So I think we are on course to get this to 100% in its first year, even though the account has had a lot of extra money has come in along the way. A lot of money came in December, I think it was, and January. So I think it's actually doing very well. Yeah.
Absolutely.
Okay. So that's I made the meeting really short because I've twisted my back. It's hurting me to sit here. So I didn't want to spend too long this evening, but I'm very happy to answer any questions.
Just a quick one, Jeff. I was looking through the Apex information, and I saw something, a short on HAE, which looked different to all the other trades that were there. What was the what was the process or the logic behind that?
Oh, I don't know. I'm going to have a look. We get caught out now and again by lids that don't expire. So what stock was it?
It was HAE.
HAE.
I just saw it on the Apex clearing. It said HAE short, and then it's a few lines further up. There was a where you had to purchase the shares to cover the short.
Oh, yeah, that'll be it. That does happen very occasionally. I've got a couple of those at the moment. I don't think it's on here. I've got one on Vert. So Vert, we closed the put before it expired, and the lid trade remained in place. Now, actually, I don't think that, I actually think I closed it, but they don't seem to think I did, or it was too close to the expiration date. So effectively, the lid was triggered, and we were, and somebody had the shares put to them at the lid price, or the lid strike price, but we didn't own the shares, so we had to go and buy the shares to correct that situation. I think I've come across it about 3 times, and that
Is
must
that
have
essentially
been,
what you'd call a naked call then?
yes, it is. Yes, yeah, it would be naked because we didn't own the shares that we were then putting to somebody. But the system shouldn't have put them, and I have actually complained, not about the HAE one, because I think that one, the lid had triggered, and it was sort of 0 cents. I was unable to close the trade because I wanted to sell it. So when a lid trade opens, it is a buy to open.
Mm-hmm.
To close it, it's got to therefore be sold. But if there's no market, then you can't sell it.
Right.
That's the situation. So we were unable to sell it, and effectively we were left holding the baby.
Okay.
That's,
thanks for clearing that up. I just saw it and I thought, oh, that's a bit unusual.
Yeah, oh, you're perfectly right. It was unusual. We don't like it. I've just so that's made me think. On this Southwest Steel here, we actually have, and I don't know why we have, one contract of a lid. So only one of the 12 triggered, if you like, only one was taken up. So there would be a danger with this, that the shares don't get put to us at 27 because we've closed that trade, but that somebody, if the price ended up below 26, the system would put them to somebody. As it so happens, the price of X is way up there, about 37 at the moment. So the chances of it happening are nil, is 36. However, if we could sell that, we would be better off. But there's commission, you see, that's a problem there. So we would, if we sold it at the current price, we would get $10, but pay 15 out in commission.
Yeah.
So we don't like it. So we put 15 on it and verify it. Then we get 15 and gets 15 for it. So this probably won't go through because they're not going to give us 15 cents when they only want 10 cents. But it can sit on the system as a limit order in case they feel like putting it through at some point. So yeah, so that we are in danger there of having to buy 100 shares to get rid of that, which I don't like.
Okay. No, thanks for that.
Yeah. It's every day's a school day. Here's another one. Vivo. We're at 85% profit. So we sold it for 820. We could get it back for about 180. The strike price is 25, and the current price of Vivo is 25.52, and it's an April one. So if we wanted to, we could close that. But while the price is above 25, then as you know, if it stays there, we're happy, and we've got a lid on it, 22.50. Oh, well, that's interesting. So what we could do with this is buy back the put, the $25 for 180. So we'd make a few bob there, and there is a price, so we could actually sell the lid. And the present price on the lid is 80 cents. So effectively, ignoring the commission, the cost of buying it back wouldn't be 180, it'd be $1.
Mhm.
So I think that's probably worth doing. Not that we need the money, but while it's there. Yeah, anyone happy? So 180, we want to pay a bit less than that if we can. All helps.
Quite a spread on that.
There is quite a spread. I'm going to go a bit further down than that. Try 150. Oh, suspended. The market's closed, kids. Does everyone know why the market's closed? The US changed their clocks to summertime a week gone Sunday. So instead of 9 o'clock, it's it closes our time 8 o'clock. Do our clocks move this Sunday?
Yes.
Yeah, well then we're back in sync. So we get this twice a year every year. So that's why it's closed. So anyway, that'll sit there as a limit order. We'll see what happens to it tomorrow. In fact, the previous one was suspended anyway. I'll get them at 1:30 tomorrow afternoon. In fact, I'm going to cancel them.
I was going to say I would cancel them because you went down a bit in price to see what happens. So.
I'm going to cancel them, but so I'll go back and do those tomorrow. So even the cancellation, they've cancelled. That's all right. Okay, so that's about as far as we can get this evening. It's heading in the right direction, especially for the early months that we're in. As I said, it takes 6 months to get the engine going, and then the second 6 months we make more money. And I'll just show you if I've still got it here someplace. Sapphire. I'll give you a sneaker look at Diamond. Yeah, so this club's been going 12 months. They've put basically 500,000 in total. They're up 90%. And again, where their money came in, a lot of it came in the second 6 months, if you like. And they're up 148 if you take the average amount that's gone in. The new money coming into this has slowed down, although now I've got another 50,000 coming in. And therefore these figures tend to move closer together. But they're exactly the same stocks. We do the same deals, different times, different arrangements, different numbers, but yeah, it does get there. So I'm apologizing because we're only wherever it was % up. Never mind. Okay.
Still averaging what, 8%, 9% a month?
Yeah. I don't sell it on that basis, but I'm happy to do it. Yeah.
It's not to be.
I normally tell people 4%, 4% a month. Actually, what I generally say is 2 or 3% in the first 6 months, and then it goes up to about 4% thereafter. And then people are, we're under promising then and over delivering, so they all feel happier about it. For those of you that are introducers, this week I'm working on the brochure, and I'll be putting some of this stuff in there as examples that you then can use to let people consider if they want to join us or not. So that should be out hopefully the end of the week, beginning of next week.
Cool.
Okay.
Perfect.
Great. Thanks very much.
Thanks, guys.
Thank you, Jeff.
Thank you.
Thank you, Jeff.
Bye,
Cheers.
everyone.
Bye.
Cheers, Jeff.